And when you're young, it's particularly important that you figure out a way to steel yourself to take a step back and see the bigger picture. If something's growing 100% in the last year, that's really ripping. And that's going to grow at a fantastic pace. Yeah, I think borrowing against your Bitcoin will become inevitable because it's capital. But borrowing to excess, borrowing without doing the rigor, borrowing in ways that don't make any sense are always a bad idea. I'm focused on generating capital returns rather than income. It's just a phase in life. Nothing special about it. It's just age. Gray hair versus not gray hair. It's going to enforce on you more discipline. How could it not? Because the cost of waste is huge. In the world of Bitcoin, you don't have elastic supply in the measuring tool. You have a fixed number of 21 million in Bitcoin, and that's a game changer. You would expect Bitcoin to be one of the most powerful stores of digital capital and value.
Before, for the few people that don't know you, that aren't aware of you, maybe you can give them some quick overview of who you are and why you're excited about Bitcoin.
Sure. So I am a partner in the growth equity fund that invests in digital space and the entire digital space. It's called One Roundtable Partners and 10T Holdings. By the way, it's a good time for me to mention that my views today with you, Robin, are my own and not my partners, although I certainly hope my partners would agree with me on everything I say, but I can't be sure, so I'm not speaking for our firm. But I'm also, I came to it, to the digital asset space in Bitcoin via an interesting route. I'm also twice a public company CEO. I'm the former CEO of Sotheby's. I sold that in 2019. That was a public company on the New York Stock Exchange. And also the former CEO of the Madison Square Garden Company, also a New York Stock Exchange listed company. And that's, of course, the home of the Rangers and the Knicks in New York, as well as the Madison Square Garden and many other things. In fact, then it was with cable networks. So I've been a very, very long time at the intersection of creativity and disruptive technologies. So
how has this being like a publicly traded CEO, seeing kind of the money like up close, influenced your thinking in the beginning of when you first encountered Bitcoin?
Well, interestingly, and by the way, the one point I often make, which I forgot to make in my intro, is I've also been an adjunct professor at Stern Business School at New York University for 25 years. I've been 2 years on hiatus because I've been doing other things, but I'm about to go back in the fall and do a new course. The reason I say that in answer to your question is because it's not just running two public companies and being president or CEO of many other private ones. But also the fact I've been teaching finance is part and parcel of the answer. And what I'm trying to say is, in the fiat system, there is a lot of science and math and process designed to create opportunities for people to generate more fiat returns on a system that has a sort of melting or sand underneath it. In other words, Wall Street is very, very good at finding ways for you and me to generate fiat returns on fiat, because we're all sort of on a treadmill, if you will, to mix metaphors slightly. We're all sort of running to try to get ahead of the underlying erosion of purchasing power and wealth that you have in the fiat system. So in the world of running public companies, you're very focused on creating great service, of course, for your clients and customers. You're very focused on creating great experience for your employees, but you're particularly focused on how to generate returns for your shareholders that outperform the cost of capital. And understanding what the cost of capital is quite important. Bitcoin changes all of that because, of course, everything I just was talking about is built on a foundation that is a fiat system. In the world of Bitcoin, you don't have elastic supply in the measuring tool. You have a fixed number of 21 million in Bitcoin, and that's a game changer.
It's interesting. The cost of capital is that this hurdle rate of Bitcoin, when you are now like getting into a Bitcoin standard and you're now thinking in terms of Bitcoin, and I want to just get more Bitcoin and not just like outperform the S&P 500 or outperform inflation rate or whatever the cost of capital would have been otherwise. The Bitcoin as the hurdle rate. It will be really interesting for me to see how in a Bitcoin world the portfolio allocations and how people think about resource allocation changes that whole game.
100%. And by the way, Robin, let's push it slightly farther, which is we tend to think of Bitcoin as the hurdle rate versus other investable assets or savings. But what we should also step back and think of every time you spend money, Robin, if you are thinking about it, that is a Bitcoin in effect sold to spend money, right? Everything you spend money on. And so, whether it's art, whether it's house, whether it's a car, whether it's a lease, whether all those things, you are in effect because you have an opportunity cost, which is you could have put a little bit more money into Bitcoin, and you know what the return rate on that is. So what it forces you to do is to think about constant trade-offs between your savings and investment and what you're spending money on. And I would argue if you're thinking about that clearly, it's going to force a level of frugality upon you. In other words, if you think that you can put it, you can either go buy a new car or you could put the money in a savings account and get 4% fiat, maybe 3%, whatever the rate is. You think, well, maybe the car's not that expensive. But if you think if I don't buy that car, I can take that money and go buy, I don't know, 25% of a Bitcoin that's going to be worth potentially millions of dollars someday, you're going to think a lot more about buying that car. You're going to say, well, maybe I don't need to spend the money on the car. How do I reduce the? So I think one of the real hidden treasures, if you will, of Bitcoin is it forces all of us to be clear on frugality, or it makes us more frugal. It makes us more conscious of the money we're spending when it's not on Bitcoin.
It's
It's a
like
life change.
it's like every purchase is all of a sudden like a 10x more expensive if you think about that.
Yes, yes. And by the way, remember, again, if your alternative is to leave it in cash and you're not thinking about it, and you don't think of it the way you do when you think, oh my God, I have to, this cost me half a Bitcoin to buy that very expensive. Well, we'll do German automobile. Very expensive German automobile cost me half a Bitcoin. Is it worth it? Well, half a Bitcoin, that's really expensive.
It will be hard to this half a Bitcoin will be very hard to work for in 10 years time. Like that's the kind of always how
Yeah.
I look at it,
And
especially
maybe
if you're
sooner
young.
than that. Maybe
Yeah.
sooner than that. Maybe really soon. And think about how interesting that is because it shows, and I don't know whether you want to go down this path, stop me at any time, but it shows you, Robin, how in effect financially lazy we can become in a fiat system because we don't value the money until it's really a very large amount. In a world where we do value the money, in a Bitcoin world, where the money has clear, present, tangible value and it's growing, and money becomes digital capital becomes precious. Think how rigorous fit, if you will, it makes us be in terms of how we spend. It's a game changer.
It's thinking about twice if I spend that money. I mean, if in the fiat world you have to kind of get rid of the money, you are really disincentivized to save, and if you flip that and you're incentivized to save, this changes everything. I have a really hard time thinking about that long term, what this will change, because there's like the Bitcoin community right now, and you see all those amazing people that like most of them try to be healthy, most of them try to be build families, like all of those things that make the Bitcoin community great. And I'm wondering often, is that because we have better money, or is it just because we're in an early revolutionary movement and it's just like the first like 100,000, 200,000 people that are like in a smaller bubble? Do you think that this sound money has like a huge impact, as huge as the difference between the Bitcoin community versus everyone else right now?
So one thing I would observe is remember that most people who are adopting Bitcoin in the community that you describe, and of course you probably monitor the community on social media and places like X, that crowd tends to be young. So those are people in the world of starting their families. Most of them are still in a very healthy phase of their life. There's a lot. So part of it is that, which is sort of a sample bias, if you will. But let's not underestimate the power of the philosophical point you're making, which is when you think of your world as Bitcoin as the unit of account. Now, I'm not talking unit of account the way we define money. I'm just talking the philosophical unit of account. meaning every choice you make that is a financial choice, however small, has an implication vis-a-vis Bitcoin if you're thinking about Bitcoin philosophically. And in that environment, yes, it's going to enforce on you more discipline. How could it not? Because the cost of waste is huge. But interestingly, think about the alternative, right? When the government is printing money for whatever reason, and money just keeps growing and growing and growing, the number of dollars keeps growing, growing, growing. It allows you not to have to worry about waste because there will always be more dollars tomorrow. Isn't that peculiarity? So it wouldn't surprise me if there is some element of truth to your question, which is to say, when money is precious, it forces a sort of life rigor on the individual who has the mindset of Bitcoin. But that's just a guess. Nobody really knows.
And as a CEO, you're also basically
Former CEO,
former
former CEO. I'm not in the CEO business, Rob. And in fact, my one requirement with my colleagues at the growth equity firm is that nobody report to me. So I don't have any responsibilities.
I guess that's a big lift off your shoulders.
Oh, it's wonderful. Yeah, exactly. So,
but I wanted to make a whole different point of like as a former CEO of a publicly traded company, you also, as you said, like very focused on like the making shareholders happy and making make sure that there's a return of investments. You're basically also like raising capital, which is really interesting if you're a Bitcoin investor, because as Bitcoin has right now a pretty high hurdle rate, and you think about like, okay, what idea do I really put my Bitcoin towards? Because I put those Bitcoin at risk. How do you think this venture capital, the resource allocation on the capital market, even like stock market and the company market, will change? And how do you see it already right now with like those early treasury companies? I mean, Strategy, CyberSecurity, like all those big ones, maybe already showing us a little bit of the future, or is this just still like fiat engineering what they're doing?
No. This is again a very important question, Robin. So first, if Bitcoin is going to be the standard for returns, and by the way, it's not very expensive to own Bitcoin, even if you don't want to do what I call the cold storage safe route for Bitcoin. You're just willing to buy an IBIT or ETF or any of the ETFs. They're all very good ones. You're paying 25 basis points a year for an instrument that I think I saw even 2 days ago. The ongoing return is in the 50% range. So if that's going to be the standard, now, mind you, over time, that return will come down because we're going to enter a bear market at some point. But even the through the cycle returns are 40+% right now. So the reason I say that is, what's the argument to invest in a venture capital project or private equity project or some other kind of project that doesn't achieve those returns and moreover pay fees for it? Well, the argument is you have to be invested in something that will produce returns that on balance either satisfy lower volatility than Bitcoin because you want lower volatility, or satisfy a higher return. In other words, a higher return per unit volatility that you're willing to stomach. That's one of the reasons, by the way, I'm very comfortable investing in digital assets, because from my perspective, I'm comfortable with levels of volatility, but also I want the fastest horse in the race. And but to your question, there is some segment of the world that is volatility averse, and it's a big segment, and they'll continue to like assets like gold and lower return, more tangible types of returns. But there's no question that the proportion of assets in the world that's going to Bitcoin or digital asset proxies, we could talk about the Treasury companies as an example, is going to rise, and it's going to rise sharply, because it's just a superior product for people who are comfortable with volatility. Or, by the way, who've taken on a new view, and I think Michael Saylor's been a great proponent of this, that volatility is in fact vitality. We don't need to go down to some people who will never get there, and that's okay. But for those who've embraced that idea, then it's almost impossible to get them to think about any return that isn't higher than that is less than Bitcoin. Because why would they?
I mean, there are treasury companies like Strategy with MSTY and like the Stride and Stride option project, and everyone that I talk to that I involved in those things, they actually want the volatility. I'm not a good
Yeah, well,
enough
they need
expert
it
on that.
badly for their income. Exactly. MSTY or any of the call selling structures, any of those, they need it. By the way, I personally am not oriented as an income investor. So Strike, Strive, Stride, they're not necessarily for me. I prefer capital appreciation. However, I have great respect for those products and can understand lots of uses for them. For anyone who wants to have in-year income returns, if I were looking for that, I would certainly be looking at those kinds of things.
Why are you focusing on capital appreciation versus like income generating investments?
Because I'm just in the stage of my life where I am I'm focused on generating capital returns rather than income. So that's that. It's just a phase in life.
Oh, okay. Interesting.
Yeah. Nothing special about it. It's just age, gray hair versus not gray hair.
Interesting. Treasury companies are a super interesting topic for me. There are, I don't know how much you know the podcast, but I interview basically every single Bitcoiner. I've now gathered
I've seen that daily. Amazing.
a little bit over 500, I think 10 or 15 different Bitcoiners, and now 540 episodes.
So I get to be number 541.
You're actually 541. Yeah, 541 is
541. Okay, I'll note that. 541.
Is that a special number for you?
All-time high Bitcoin on 541. We got that.
The point I was trying to make is like, I see a lot of people that are all in on the treasury companies and they almost don't have any Bitcoin in self-custody, and they're like really focused on treasury and the strategies behind them. And then there are people that are very focused in self-custody, and they say like, oh, I don't want to touch them. They're kind of almost like altcoins, but with a real use case, and it's a distraction from Bitcoin and self-custody. How do you look at treasury companies, and do you see a danger in them either for Bitcoin itself or for the people that hold it?
Yeah. So a lot of it depends. The answer partly depends on your time frame. So should we say in the next year as an example, and then we'll go farther, or because the answer will change as we think about flexing that time frame.
I think it would be interesting to see one time frame being like kind of short term, like around 1 year, and one time frame being like maybe longer term, like 10 years.
Okay, let's do 1 year first. Insofar as the treasury companies are acquiring Bitcoin and providing a substantial bid in the marketplace, they are a net positive for the Bitcoin community, in my opinion, in the short term. Moreover, they're making it possible for institutions that can't necessarily buy Bitcoin directly all over the world, by the way, to take advantage of that. And remember, the institutions aren't some hidden group. I mean, if it's a big pension fund, there are pensioners, really, mom and pop, who are actually benefiting from that. So that is a powerful and important force, and almost a sort of counterintuitively democratizing force if they have pensioners available to buy those, or mutual fund holders available to buy in them. And so that to me is a net positive. I also think that the financial engineering and frankly innovation around companies like obviously Strategy and Metaplanet and the rest, to me is impressive and moreover helpful to make it easier for people to have different kinds of structured products with Bitcoin as the core. So that to me is a positive. As you look out very far, and when I say far, I mean sort of 5-10 years. Well, you got to ask some questions. Bitcoin's going to need to evolve, and it can't be static. And it has a mechanism, by the way, to evolve. It's consensus-oriented system, which we're all familiar with. And we are obviously concerned at some point that both the decentralization have a strong component in what's going on, and that's an important aspect too. I'm not particularly concerned about any of that. And moreover, I think the people that are accumulating a lot have only the best interests of Bitcoin at their core. So while it's easy to point to that and be concerned in a theoretical level, it's not causing me to have any jump up and down concern at this point. But there's a possibility at some point it might change.
Because everyone is incentivized to do the best thing for Bitcoin, because Bitcoin is aligning the incentive of all players then.
Yes. The one area where I do have some concern actually doesn't have anything to do with the Bitcoin community, interestingly enough. It's actually because when you look at the leverage ratios of the Bitcoin Treasury companies, they're generally quite modest, and they're exploring a lot of financial rigor. I am modestly concerned as I look through the cycle about people that are borrowing to play the treasury companies, and particularly borrowing a lot to play the treasury companies, and particularly borrowing for leveraged plays on the treasury companies. So now you've got Bitcoin, which is volatile. You've got a treasury company, which is more volatile. You're borrowing on top of that. And then you've got maybe a leveraged way to play the treasury companies. So you've got leverage and borrowing and borrowing and borrowing. That doesn't end well usually. I mean, we've seen this film more than a few times, Robin. It doesn't end well. And so I do have a modest concern about that. It is encouraging, in my opinion, that the lenders in the various groups, the banks, are maintaining pretty tough standards, I hope, on the people, institutions, and individuals, mostly institutions, that are speculating in that space.
Is it the same for borrowing against the Bitcoin, or is it just when you have leveraged or strategy plays or like treasury company plays?
Yeah, I think borrowing against your Bitcoin will become inevitable because it's capital. That's a normal thing. But borrowing against capital can be a really thoughtful thing when the capital is when the borrowing is thoughtful, when it is not excessive, when it's prudent. In fact, it can be quite helpful. Look honestly at what Saylor's done is really quite amazing. But borrowing to excess, borrowing without doing the rigor, borrowing in ways that don't make any sense are always a bad idea.
It's really interesting because I've seen a lot of people saying they're doing the Seyr strategy and borrowing or just loaning money to get more Bitcoin. And Seyr got in Prague a really interesting presentation where he showed the graph of like how long should be the duration of a credit issuance and how high should be the interest rate. And he's kind of saying, starting from under 10% interest cost and over 10 years of duration, it's a financial genius. I think that's how he called it. And under that, it's I think the gambler, and like he had different names for them, but basically everything else was bad. And then when I scroll through Reddit, scroll through Twitter, I see a lot of people saying, I do the Seyr strategy, and they're doing 15% for like 18 months, which is to Saylor's strategy, for Saylor's definition, a financial gambler. So I'm just a little bit concerned that people are getting in personal debt and trying to do the personal things and thinking they're doing what strategy and Seyr is doing, but actually just going balls deep into Bitcoin with 120% debt and maybe get burned if there's like a 50% downturn, which can happen, I guess.
So the only difference between your opinion and my opinion is I'm more than just a little bit concerned. Otherwise, I agree with you. I think it is very concerning when people are mixing borrowing, using leverage with Bitcoin. You have to do it. First of all, you have to know what you're doing. You have to be very careful. I think Seyr laid it out well. I thought the Prague speech was brilliant. The only difference between you being on that, I'm more than a little bit concerned. Yeah.
I'm just trying to be conservative. Yeah, the upside is also like if you just do it a little bit, if you do the strategy conservatively, like how many more Bitcoin do you actually accumulate? So if you really want to benefit from the strategy, you kind of have to go more all in with that, and then the risk is just not there for the upside. I just don't see, because I'm in the weird situation where I earn Bitcoin, so and my fiat bills are mostly fiat,
Yeah.
so I have to sell Bitcoin or borrow against them at some point, and I
Yeah.
decided I don't want to do any debt, and I just sell them, and then I have that money. So it is an interesting discussion for me, but I chose to not use debt at all.
Well, I think that's prudent. And remember that while I think it is a mantra that never sell your Bitcoin. I mean, how many times have we heard that? Like 500 million just in the last week. But the truth is, if you look at Bitcoin's price in the last 6 months, people ask all day long, how is it possible that the Bitcoin treasury companies are buying like crazy? The ETFs are growing like crazy, and the price has sort of stalled in the $100,000, $110,000 range up until really yesterday, where it seemed to break the 110 number. Um, why does it move? Well, the answer is very reasonable, which is somebody's selling, and a lot. And guess who's selling? Whales are selling. Now, they're selling less than they were even a few months ago, but there's a wonderful, wonderful Bitcoin analyst. I couldn't recommend him higher enough. Checkmatey or James Check. He does a great analysis on this. I think you know him. And one of these things is he'll show you that its longtime holders have, in fact, been unloading a lot of Bitcoin at the 100,000 US dollar mark. And what that tells you, Robin, is that even the whales part with their Bitcoin.
And he was just on a week ago for the second time on my podcast, and he like literally said exactly that. And it's also because a lot of people say that like, oh, that's like I hear those billions are coming into Bitcoin, and this Bitcoin is just a way bigger asset.
Yeah, it's $2 trillion. I mean, come on, it's not small. It's going higher. I believe over time, it's going to be volatile. It's going to be a long run ride. I think that you point a different issue out, which is really important, which is for some young people in particular, and maybe, but I'll use young people. I think it affects also boomers and Gen X, but less so. For some young people, the feeling that Bitcoin doesn't return enough is palpable. And by the way, that is so profoundly sad to me because prior to Bitcoin, it shows you how desperate it is, right? Because there was no asset returning like Bitcoin until Bitcoin comes along. So, I mean, literally none. So now you've got a Bitcoin, which is returning, call it 40, 50%, as I said, in the most recent year. And that's not enough to feel as though you're getting ahead because you don't have enough fiat left over each month to put a little bit in there. That to me is a profoundly concerning issue. And it's not surprising that folks that feel that way go a little bit farther out on the risk curve. They want to do not just Bitcoin; they want to do leverage Bitcoin. They want to do they want to do a leverage treasury company strategy, or more than that, they want to buy leverage on the leverage company strategy. And the only thing I'll say about that is, it's far be it from me to give advice. I'm not giving any advice, and I am understanding how people come to that. But it needs to be done carefully and very thoughtfully and very deliberately. The other thing I would say is, and this is maybe more hopeful, it's really easy, particularly for you, Robin, and me both, because we're sitting each day, we're watching the daily market, we're watching, sometimes looking at it throughout the day. You probably track it even more closely than I do because I've got other things I got to do. But and we feel as though Bitcoin isn't doing anything. It's not moving. It's just sort of stuck. And then you look 1 year ago today and you see you're 100% higher. So that it's like watching that clock. It's not moving. But if you step back and don't look at the clock every single day, and you look at what happens over a week or a month or something like that, you see profound change. And when you're young, it's particularly important that you figure out a way to steel yourself to take a step back and see the bigger picture. If something's growing 100% in the last year, That's really ripping. And that's going to grow at a fantastic pace. And by the way, there's some that believe it's been, a solid year, but not the greatest year. So you sit there and you say, we haven't had the really parabolic craziness yet. Whether we do or not, I'm not sure. We'll see. But so I would encourage everybody to step back, see the bigger picture. The bigger picture is volatile. There'll be periods of up, there'll be periods of down, but it's generally speaking up and to the right. Whether you see the power law, whether you see the logarithmic chart, it's all the same charts. They're up and to the right. So don't get stuck in it hasn't moved in 3 months. It's the same number as it was in December. I don't understand. I'm not moving. I can't get ahead this way. That's not the right way to think about it, in my opinion.
I was very surprised when I started this YouTube channel, and it grew from like a few hundred visitors to now like 40, 50, 60,000 per week. So it's a kind of good sample size of Bitcoiners. When I looked at the age range of my viewers, I'm personally 26 years old, so I'm actually still Gen Z even. My age and under my age is not even 1% of my viewership. So it's like very few people have this like long formation and like just Bitcoin content. And then like the average is like 47, 48, something like that. And I even have
millennials.
And I have a lot more people over 65 than under my own age, which is for a young host really interesting to see. And I get that comment a lot. I just posted that one with Checkmate, with James, as we discussed, and people are like, oh, it hasn't moved up. Like, it's so boring. Like, like, of course, if you look at from like today and like yesterday, and you like look at from like, okay, November we hit 100K. Now we are also around 100K, of course. But if you look 12 months out, we are about like 100% up. If you look at 5 years, we're like, I don't know, 1,000% up, something like that. I don't know the exact numbers, but we are massively up. And then it's like, you just don't have you just want to make a bunch of money next week. And that's why you don't make any money in the next 5 years.
Precisely.
The first time I ever made any money, I got myself from that money a watch. And ever since then, I collect timepieces to remember times where I achieved some milestone. That's why I got the Bitcoin 2025 edition when I went to my first ever American Bitcoin conference. So for me, the Bitcoin watches from Coin Vigilante represents the time that we are living in. For every person that wears a Bitcoin watch, I know they are representing sound money to the outside world. Make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. I know how big of a hurdle it can be to have self-custody, but it's so freaking important to make that first step. We have to make sure it's as easy and simple as possible. And that's exactly what BitBox did. BitBox created the simplest and the easiest hardware wallet to use to get into self-custody. So get yourself a BitBox down from the link in the description. And when you use code Robin, you even get a 5% discount. The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase, you should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. And we have right now a summer sale going on for 15% off. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today for $186. And you can make with that unlimited amount of backups. Go now to microseed.io. Again, that's microseed.io to get your last backup tool you ever need. And that's,
couldn't agree more.
Yeah, and that's really interesting to see, because my own generation, people that are my age, or a little bit younger than me, they really focus on crypto, sometimes strategy, sometimes just like getting more. They want casino. They don't want long-term wealth building. I hope it's just an age thing, and not something that's actually like coming along in the people. But I don't know, like.
Well, let's talk about the problem with millennials and, to a lesser extent, Gen X and boomers have. We are closer to retirement. So not the early millennials, but the late millennials are closer to retirement. They're looking in the future and they are not confident in their nest egg to be able to provide for their retirement or to retire in the way that they want to. Or they're beginning to, have to take care of parents that are elderly and ailing or whatever the case might be. So it's not surprising that elements other than the sort of innovative young would be thinking about, how do I take this nest egg that I've worked hard for, but frankly in the fiat system has been leaking away in terms of its purchasing power and relative wealth, and take a lesson from a slightly younger demo and think about Bitcoin to potentially give me more oomph. But unlike the young, I have less time, which means my returns per unit time need to be higher if I want to achieve these goals. So at a level, I'm not at all surprised at your demography in terms of who's listening to you and how people are responding to your podcast and your YouTube, Robin, because for people that are getting closer and closer to the end of their working lives, who don't have the savings to be able to take care of themselves, it's an urgent problem.
It's interesting. It's also interesting because if you come in and you have all the options there, you have Bitcoin, you have real estate. Kind of interesting question maybe for you, because you had life before Bitcoin, and my life started with Bitcoin kind of. Since 21 years old, I'm almost all in Bitcoin. How did you look at all the assets? You can own stocks, you can build your own equity, you can build real estate, you can do all those things. What makes Bitcoin so unique in 2025?
Well, Bitcoin has three advantages over pretty much everything else. And what I mean is, it's not that each advantage is better than everything else. It's the collection of the three. Number one, it is digital. It's entirely portable. It's not tethered to anything. It's also really easy, transportable. It's very straightforward. The second is, fundamentally, it just grows in value really fast. And moreover, when you think about why, it's correlated both to the secular adoption of the technological structure of crypto underneath it, but also it is essentially growing in relation to the money printer and the expansion of fiat capital, which I believe is a secular trend that isn't going away anytime soon, which means Bitcoin should continue to grow. And number three, the volatility of it. For me, I like the volatility, and believe me, I don't like big red candles, so I'm not crazy, right? But I like I like the concept of the volatility more than the really ugly down days, that's for sure. But volatility makes it a really hard asset for people who don't like volatility to own. Why is that positive? Because, Robin, it means that if you and I can be comfortable with the volatility, um, people will come to Bitcoin later than we do because the volatility is low, when it's lower in the future, and we will have made greater returns. Now, that sounds deeply selfish, and I admit that that is true, but it does mean, in terms of the way you framed the question, not as a moral question, but as a financial question, things that you can be early on as an investor that are attractive, everything else being equal, they're better than things where you're late. And the volatility means, if you can stomach the volatility, or you can put the time in and realize that the answer to the question, am I late, may be no, then you're going to have a better return over time than people who don't. Now, again, I'm not speaking to the moral issue, which I think is also important, which is, I have a personal point of view that we have a moral case wherever possible to orange pill our friends and family, but that's a sidebar.
I want to get to that moral case later, but yeah, I just want to add, I get actually excited when we have down days. It took me a long while, but as I said, like, I get paid in Bitcoin, and I get paid throughout the month. And so when a downturn is like, and at the same time, like in that week, I get some money in fiat or Bitcoin coming in. I'm like, I get more Bitcoin for the same money coming in. If the Bitcoin price would have been higher, I would just get less Bitcoin because it's denominated in dollars or euros.
Yes, exactly right.
And you're like, I'm young. I'm 26 years. I don't need money now. Like I can live wherever I live comfortably, but like I don't need any money right now. Maybe this changes later with kids and responsibilities and all those things.
By the way, I suspect it will. Just
yeah.
By the way, that is the prediction today I'm going to make, which will be more significant than any other prediction for you. It will.
You will need more money in the future.
Yes. Yeah, you will.
And exactly. And that's why I'm extremely excited when Bitcoin is going down, because I know where it is in 10 years. So if Bitcoin stays under 80K for a very long time, like, I'm very happy with that.
All right. Well, let me tell you that everybody who's older and either in retirement or closer to retirement, I'm close to it at some point, but not urgently. Maybe I'll keep working as long as I can. But everyone who's closer to that than you are is completely on the opposite side of that trade. They're like, no, I don't care about your time preference, Robin. 10 years, 10 years is going to be too long. I need it in the next 3.
I hear that sometimes when I see like, oh, like, where's Bitcoin in 2045? And people are like, I will bid that then.
Where am I in 2045? Let's start with that. You? Okay, fine. You can worry about Bitcoin in 2045. I'm worried about me. Thank you very much.
Okay, let's not stress the age thing more. But yeah, it's an interesting topic. I want to get to one thing, Bitcoin as money. Do you see it as an importance that we already kind of think of spending Bitcoin and using it as money and kind of push Bitcoin more than just as an investment?
So let me step back. So the way I'm hearing your question is how do I think about Bitcoin as a unit of transaction or a currency per se, as opposed to a store of digital, a digital store of capital? Well, there are some and prominent people that have made the argument that unless it becomes a unit of transaction, or in effect a currency, it will never really achieve its full potential. And I have to say, it's a little difficult for me to see it that way, and I need to think about it some more, because the people that have taken that position I have great respect for, and they're very intelligent, so I may be missing something about their argument. But one of the actual advantages of let me turn the question around. Let me turn the answer around. One of the disadvantages of having a fixed supply is that it isn't necessarily the preferred option to trade. And so if that were the only option to trade, barter for goods and services, you can imagine that having a fixed supply of currency, finite, that becomes more and more valuable would put a damper on the economic system of goods and services. See that? Meaning, imagine how if euros suddenly became, we'll do Austria, if euros suddenly became very, very scarce, think about what the effect on the economy in Austria would be. For example, if you were trying to buy coffee this morning or whatever the case you were doing, and if there is if it's really hard to get a hold of the underlying currency, it's tricky, which is why I say, okay, well, you can use sats and there are 100 million of them per Bitcoin or whatever the case might be. I get it, fine. But at some level, you're going to have a large number of something to be able to generate volume in an economic system, because the goods and services transactions, the transactions throughout the economy are enormous, and you're going to have something to grease that system. That's a different value than you will of something which is finite. And by the way, remember that the finite quality of Bitcoin is one of the reasons why it is such a powerful appreciating store of value. So there's a tension between that. You want to have a lot of currency or sort of liquidity moving through a system to make it really easy for people to buy and sell goods. And at the same time, for storing capital, you want to have it both desirable and scarce. So I see a natural tension there. I personally am taking the side of it's a fabulous store of digital capital. I don't think now maybe some derivative version of it, or sats, for example, can be a currency version of it, and that might happen over time. And I understand there's some people that view it that way. But I'm not sure there's much difference. Meaning, is it possible that at some point we would have to increase the number of sats to make sure that the economy doesn't slow down at some imminent point, not imminent, but some distant point in the future? I don't know. The point I'm making is currency needs to be easy to get to, needs to be around, it needs to be readily available, and store of value needs to be digital and scarce and desirable. And in a sense, if I can just add one other point, isn't that the problem for fiat? It's trying to serve two different purposes. It's trying to serve the purpose of making it possible for you and me to do transactions very readily. And in that world, it needs to be plentiful. And it's also trying to be a store of value. On balance, I would say fiat does a better job of currency and providing for transactions. The dollar, to me, is the best in the world at this. It's readily accepted all over the world. But it's not a great store of value. So there you go.
Is that only the case as long as Bitcoin is still kind of in the adoption phase, or also when Bitcoin is kind of already kind of adopted by almost everyone, and we don't have a lot of adoption growth? We only have the growth of Bitcoin in the productivity that humankind is kind of acknowledging.
Well, tell me what the price is when adoption slows to a crawl.
That's a hard question, like a hard question to answer.
So we'll take whatever price that is in your world where it suddenly slows to a crawl because everyone's fully adopted. By the way, how many trillions are you talking about? But anyway, let's at that moment when it hits what we call adoption slows to, call it, single digit growth, or the growth of the underlying economy, if you will. When it hits that point, what's the price? Take the price, divide that price by the number of sats per Bitcoin, and decide if you need more sats. That's the question you got to think about.
Interesting. I mean, I think this 400, 500 trillion is kind of the consensus a little bit. Where I'm like, this is the kind of the total addressable market right now for Bitcoin. There's a lot of different theories with like 200 trillion, like some crazy people like 800 trillion, and many different things. It's really interesting. So you,
There is another angle here, which would make me dead wrong, by the way. So let's stay with this. In a world of AI and particularly agentic led transactions, you're going to need digital rails. You're just going to need them. I mean, let's be clear. The business of transacting in dollars, even electronic dollars, by the way, is old rails. It's clunky. It's hard. It's not digitally sophisticated. So we're going to need something. Now, it could be that Bitcoin evolves to be a really good digital transaction system, but it's not obvious to me that that technology right now is where it needs to be. There are better ones. So again, apropos of our earlier part of the conversation, you can imagine Bitcoin evolving in a way to do that. But there are other kinds of transaction rails now that are better today. Not, Bitcoin may be much better as a digital store of capital today, but it may not be the best transaction platform that you would require for agentic AI. So long before your theoretical world where Bitcoin slows to the adoption level of the underlying economy, I would argue we are well past human-driven transactions, and the vast majority of transactions would be AI and agentic. In that world, you're going to need a completely new set of rails than the fiat system, which is manual and clunky and difficult. And so that's one big caveat on my point. Whether it is I don't know, something else. I don't even want to speculate on what that's going to look like, but it'll be here soon. We're going to be talking about this not in 10 and 20 years. We're going to be talking about it in 3 to 5.
do you think the overall impact actually from AI to Bitcoin and Bitcoin to AI kind of is?
What do I think the effect of it is? Well, I think AI is a massive deflation machine. And let's talk about what AI really is. AI is information and intelligence going to almost the supply of information, the supply of intelligence, the supply curve shifting out almost to infinity. Let's say that. I mean, think about demand and supply for just a minute. For most of my life, and even for your life, intelligence stroke information. I'll just use the word intelligence, but I also mean information in some sense. But intelligence has been scarce. It's been hard to get. So knowledge workers or knowledge machines or knowledge generally has been scarce, desirable asset. It's worth investing in. It's worth pushing to go to the best schools. It's worth trying to develop it. It's worth all these things. But what AI has done is flattened the supply curve. It's created a gigantic supply excess of knowledge and information and intelligence. And moreover, it's not only done that, it's sped it up immensely, which means if you look around the economy, wherever the value of something in the economy used to depend on scarcity of knowledge, scarcity of intelligence, or access to intelligence, or scarcity of information, in an AI world, that is completely disrupted because the supply curve for those has now shifted out to infinity. So you have to look for places in the economy that are immune to that. Bang, Bitcoin. Fixed, digitally scarce, and desirable. So if anything, as AI accelerates, you would expect Bitcoin to be one of the most powerful stores of digital capital and value.
Because it's the only thing that you cannot make more of, the only thing that is also, it's also, I think about that a lot.
Well, as you shift out intelligence and information, Bitcoin arguably becomes more valuable because it's resistant to the disruptive effect of that.
I also think about that a lot in a world where you have no clue what's sort of real and what's AI, digitally and maybe also even physically with robots. Bitcoin is then the only thing that you actually can verify. Like that's the only thing.
Yeah. Okay. Well, see, I would argue that's true, but you could say that more generally of blockchain. I think blockchain has a powerful technology for verification in a lot of underlying ways. And Bitcoin to me, though, could be that in some ways, as you say, but there are better versions, I think, in other kinds of pieces and parts. But there's nothing better than digital capital, and so we'll see.
Interesting. A lot of interesting concept to to go in there. I have.
By the way, we should definitely talk about art and blockchain, or art and Bitcoin too, which is very interesting.
What is art? What do you mean with art and
art, art. The one asterisk I would put on the conversation we were just having is this: imagine with creative art on Bitcoin, you have two sources of value embedded in the same piece. You've got the Bitcoin, the Satoshi, and you've got the piece of art. Imagine it's almost as if you're painting on a golden canvas or a platinum canvas, where the canvas has value without the art and the art puts canvas on it. So there are interesting ways you could think about Bitcoin being a platform for great art in the way that other kinds of platforms are also. Those are very early in their development, but it's an interesting thing when you project in the future that you could have entire art collections on Bitcoin. So,
yeah, and this is a really interesting one because a lot of people also argue that they don't want things on Bitcoin because
it's a distraction, it's noise, it's waste, it takes up block space, all of those things. And the one observation I would have, first of all, I'm not interested in necessarily getting into that debate with anybody at the moment, but the one thing I would say is resistance to innovation and change is one of the things that gives Bitcoin its strength. But keep in mind that one of the things that also has traditionally given Bitcoin its strength is adopting something radically different. So we have to keep the disruption innovation aspect of Bitcoin alive and nourished and not overdo it. Which is why I think, we talked a little while ago about the consensus mechanism for changing Bitcoin. Appropriately hard to get a consensus to change Bitcoin. And it should be hard because it's first a store of digital capital in many ways. And it matters. It can't just be somebody's waking up and having Cheerios rather than, Wheaties or oatmeal or something and deciding it's time to change the entire store of digital capital. It has to be a high bar to change it. On the other hand, it can't be so high that it becomes ossified and creaky.
It's really interesting. I talked about that, I think, with two guests actually this week, where we talked about the...
Oh, I'm sorry. I'm covering stuff you've already covered all week.
No. I
apologize.
It's a very...
You should steer me off these topics.
It's a very different... it's interesting, and it's a very different angle to it. The thing I wanted to say is like, what if we once come to actual threat for quantum computing, and what if the community cannot really consensus around one thing what we should do? like what if the Bitcoin is so decentralized that it's basically ossified that we cannot change it, but we need to change it, but the community cannot get to like one solution how to actually change it. So there's some threats or like some danger to not changing it at all. I think like if Bitcoin just is not changed at all, it will probably be worthless at some time because we need just to adopt it to new technology. Is that in 5 years or in 100 years? I have no clue, probably closer to 5 years than in 100 years. But at the same time, as you said, we should also not wake up and change, hey, let's make the cap limit now 42 million because we need more Bitcoin. Or like you don't want to...
Or we need it to be better currency, so we need more of it.
Yeah, exactly. So
whatever the case might be. The one thing I would say is on whether it's quantum or something else, there is no doubt. Well, let me just give you a quick story. I was at a conference not too long ago, talking to a senior executive of a venture capital backed company. That's I'm not going to say too much about it because I don't want to disclose what it is or who it is. But you have to understand, one of the express missions that he and his team have is to use the technologies that they're developing to be able to reverse engineer cryptographic proofs and keys. And in other words, the reason I say that, whether it's they use quantum as an example or something else, The reason I say that is for those who believe Bitcoin is perfect and will never be breached, and therefore you don't need to do anything. The sort of, and maybe I'm overstating it, but for that crowd, you realize that ironically, you are shorting technology. You're shorting human innovation. You're saying that the technology will never evolve to threaten Bitcoin as it was constructed or as it's constructed right now, and therefore we don't ever need to change. Isn't that ironic that someone who's prepared to accept Bitcoin as a new and disruptive and innovative form of digital capital would simultaneously short technology and saying it can't ever be threatened or change?
Probably gold people said the same thing.
Gold people said the same thing.
They couldn't foresee a digital version of gold, and some of them still don't. It's interesting, yeah. You have to be open.
Fewer and fewer still don't.
Yeah, true.
Fewer and fewer. So.
Yeah, the argument Bitcoin versus gold is getting it gets harder and harder for gold people to win those arguments.
Yeah, but I mean, gold serves a different purpose in some respects than Bitcoin. It reduces your volatility of your portfolio. Yeah. And if you want less volatility, I mean, for example, here's the thing. If your option, Robin, is to keep a cash reserve in addition to your Bitcoin to pay daily expenses, and you can put that in money markets and watch it sort of melt away, or you can put it a little bit of that cash reserve into gold because you need the money, call it next year or in the next 6 months, and you're not sure whether Bitcoin will be higher or lower then because you don't know, it's volatile. Then gold serves a purpose.
We talked about James Shack today, I think 2-3 times.
I'm sure he did, because he's actually a great evangelist on this topic, as a matter of fact.
Exactly. That's why I just remembered that I talked just last week about that he has gold as cash and just Bitcoin as his money.
And honestly, to some extent, I do too. Short-term cash, I like to just put in gold. It might go up or down a few percentage points, but if something jarring happens in the world, it generally rallies. So it's pretty good stuff. So.
Awesome. I have one question that I asked each and every one of my guests, and the question is, what can we learn from you besides Bitcoin?
Besides Bitcoin, well, the one thing I would say you can learn from me is, as I said, I've run 2 public companies. I have also taught finance and entertainment, media, and technology for literally decades. And in that capacity, by the way, Robin, I've had more than 1,000 students. More than 1,000 students. Think about that. I came to realize the Bitcoin late, meaning it's really easy for people who have been orange pilled to misunderstand how other people can't see what they see. But what they don't realize is that the process of finance, Wall Street, financial training, the current system is highly elaborate, very complex, and it is not, by the way, it's a foundation that's problematic, but there's an elaborate city on top of it that we're all living in. So you in effect. And so the one thing you can learn from me is that I came to it old relatively in my life. And it pays to be a bit charitable to people who are coming to it old. Being not everybody in the human race wants to be a revolutionary. Not everybody wants to burn the system down. Not everybody wants to be, a religious revivalist for orange pilling or Bitcoin. If you really want to bring about massive change across all of us, have a little patience, have a sense of humor, and try to think of it as a marketing challenge and not a religious exercise.
There's one thing I almost forgot, the orange pilling thing. You mentioned it. I don't know if we recorded already or not, where you mentioned that you have been to those family meetings and you're thinking more about how to orange pill people effectively.
Yeah. And guess what? I think I just gave you the answer, which is, sort of angry, nasty, rude, HFSP type trolling on Twitter isn't helping. One of the things that each you, I, all the rest of us, we each have different needs and understandings of the universe. And if we want to orange pill our friends and family, we need to meet those people where they are, what will persuade them. The same things that persuaded you may not persuade me. The things that persuaded me won't persuade my wife or whoever the case might be. And so we need to have respect for everybody in a constructive way. And I think honestly, Michael Saylor does a good job of that. And he talks about his 21 aspects of Bitcoin, and he's right. And by the way, just as one more point on that, one of the things that is amazing to me is in his talks how he's very bright, but he also tries to be as welcoming as possible to different points of view. And he doesn't always answer some of those things in a way that's accessible, but what he does is the underlying values of what he's trying to do are welcoming and inviting. And I think that is the core of a really positive experience with orange pilling or Bitcoin. I don't think we all need to be, let's make this, being rude and arrogant and flaunting whatever isn't helping.
And I had, when I sat down last year in June with Michael Saylor to have this 1.5 hour podcast that I did with him, we had a 15-minute segment in there where he basically went on a tangent how to orange pill people, but he actually just used sales, being a salesperson, be a good salesperson in that example. A lot of salespeople reach out to me that they are actually clipping that small podcast segment and playing it for their sales teams because it was so genius how Mega Saylor talked about that. And the main thing that he kind of persuade, and is the main thing that you also kind of said, is be positive, cheerful, and an educator in that space. If you're one time rude to him, that's the one thing he will always remember about it.
Yes. So let me just add one point about the moral case for orange pilling. It is, let's start with your friends and family. Why would you ever want to see a world in which you could have helped them have a better future, and you're at that better future and your future is better than theirs because you didn't help them? That's not a world you want to be in. It's just not. So for me, there is a strong moral case to orange pill, but the crucial point, and this is the crucial point, you need an invitation to do it. This is not where you just go knock on your friend's door and say, today is the day I'm going to orange pill you. No, it does not work that way. There will be a moment when you're talking to your friends and family where you get to this age, where they say, I'm really having money problems and I might need some help. I need some help. And you say, oh, interesting. You want to tell me more? That's when you start, hey, or they say, Tad, I don't understand how you can do X. And I say, well, are you interested in learning more? There will be a moment where you get an invitation. That's your moment, Robin.
I 100% agree with that. And I always bring the moral case in Bitcoin. I'll do orange pill people. I always bring the Titanic example up because in the Titanic, the first boat, the boat 7 was the first boat that left there, had a capacity of, I think, around 60 people, and only like around 20 people sat in there because a lot of people just did not wanted to face that fact that the Titanic is actually sinking. There was organizational things, a lot of distributing factors for that. But I'm always saying, if you're actually on the Titanic and you know that this thing is slowly sinking and you want to get to this promised land of Bitcoin, why wouldn't you make the best case possible, the most positive, cheerful case possible, that you make your family and the loved ones understand that you have to get on this Bitcoin thing? And yeah, it's might not be life and death tomorrow, like in the Titanic. It might not be as dramatic, so you have time. That's why you can wait for an invitation. But there's this weird balance of you don't want to push it in their face, because then you just push them away. But you also want to use opportunities that arrive to actually orange pill them if the invitation is there. And I think that invitation is so crucial, because otherwise you just push them away. I've never had a successful orange pilling where I pushed it onto someone, and I tried. I've never done it successfully, but I've orange pilled almost all of them that came to me with the question, hey, like what is actually the Bitcoin thing that you're doing? And then they're open to it, and all of a sudden, like, there's almost 100% success rate.
I love it. I love it. It's exactly right. So on the Titanic metaphor for just a minute, imagine each of the lifeboats holds 80 people. And they will not, 80 is what the capacity is rated for. And imagine that they won't become unstable until you get to 100. So up to 100, it's over capacity, it's uncomfortable, but you won't capsize the lifeboat. I agree with you. We should certainly get to 80, but we should try to get to 95 or 98 too.
I like that one. We have an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you the question, are you actively using Bitcoin to get more time and freedom in your life? And can you name one example of how why you're doing that?
So the answer to that is yes. And the corollary, one example of that is because I have Bitcoin in my life, I think it is both important and enjoyable to spend time that are with the leaders of that community, like you, Robin, telling my story.
Oh, thank you so much. I appreciate that. It's just weird to hear that sentence, like lead in the community and my name.
That's what you are.
It doesn't feel right. But yeah, thank you so much, Tad, for being on. Before I let you go, where can people find you, ask you questions, and reach out to you?
So I'm all over. I'm on X. You can reach me at @TadTweets, but it's my name on X is Tad Smith. I'm not hiding the football. And I look forward to talking to people there.
Awesome. You're not hiding the football. Is that like a saying to?
That's a saying. That's a colloquial expression in the States. I'm not hiding the football.
Never heard that one. Thank you so much for taking the time, Tad. And also thank you so much for everyone that is watching and listening for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye. This content is for educational and entertainment purposes only and does not constitute financial advice.